Hey you guys, welcome back to the channel. In this video, I'm going to be showing you guys how you can make money from stocks and why you should be investing in stocks. In this video, I will also teach you guys why people buy stocks, why companies sell stocks, and how people actually make money from stocks. So let's get started. So let's start off with what a stock is. A stock is a share of ownership of a company or a business. Imagine a company is a giant pie. Each share is a slice. If you own a slice, you want a part of the business. Companies divide ownership into thousands or even millions of shares, and people like you and me can go buy them. Let me give you an example. You don't get to walk into Apple headquarters and move furniture, but as a shareholder, you do share in the value and the profits of the company. The more shares you own in the company, the bigger your claim on the company's value, and in some cases, voting rights on major decisions as far as making business changes and how business operates. And my question is, why would a company give away ownership? 2 words: raise capital. When a company needs money to grow, open new stores, hire new staff, launch new products, they can either take on debt or sell equity by offering stocks. This process is called IPO, initial public offering. Investors buy in, the company gets cash to grow, and everyone hopes the value goes up. For example, think of Facebook's IPO back in 2012. They raised over $16 billion by selling shares on the public marketplace. That money fueled their expansion, acquiring Instagram, building data centers, hiring new talent. That's the power of going public. How does the stock market work? The stock market is a big marketplace. Just like how you go to Walmart to buy groceries, you can go to the stock exchange and buy shares. Exchanges like the New York Stock Exchange or NASDAQ host these transactions, but nowadays, most of the action happens through apps like Robinhood, Fidelity, E-Trade, or Webull. When you have these apps on your phone, you can place orders to buy or sell stocks in a matter of seconds. Behind the scenes, the market is matching buyers and sellers in real time. Why stock price changes? It's all about supply and demand, but with a twist. If the demand goes up for a stock, the price will shoot up. If the demand goes down and there's a lot of selling pressure, the price will go down. But the price of the stock going up or down, it's not dependent on the fact if people are buying or selling stocks. It can be influenced by a lot of factors. It's about the company's performance, their revenues, profits, big news if there's any, about CEO changes, lawsuits, if the company's having mergers, economic trends that includes interest rates, inflations, and market sentiment, hence influencing the price. For example, Tesla's stock surged when it posted surprise profits. On the flip side, if a company misses earnings expectations on a quarterly basis, its stock might drop, even if it still made money. How you make or lose money in the stock market. There are 2 main ways how you will make money from stocks: capital gains and dividends. Capital gains is when you buy a stock at a specific price and sell it for more later. And what are dividends? Some company will pay you a portion of its profits just for owning their stock. That's called dividend. Let's say you buy 10 shares of Coca-Cola at $50. Now it's $60. That's a $100 profit. But on top of that, if Coke pays $1.80 dividend per share per year, you get $18 a year just from holding Coca-Cola stock. What are index funds and diversification? You've probably heard about the S&P 500 or index funds. These are tools that will let you invest into a lot of companies at once instead of picking just one. Let me go into more detail on index funds. An index fund tracks a market index like the S&P 500, which includes 500 major US companies. Instead of buying a single stock at a specific price, you buy a piece of the whole market. It's like owning the whole restaurant, not just one dish. And the best thing about index funds is diversification, spreading your risk so you're not putting all eggs into one basket. But you can also lose money. Stocks can go down and sometimes dramatically. That's why you never invest money you can't afford to lose.